Hey everybody, it's Ed Conarchy back with Conarchys Corner. Hope everybody's been enjoying Conarchys Corner, and this one should be a really good one too. This one we're going to entitle Homeowners Insurance and what you may not know about insurance, and what you need to know about insurance, and what's not covered on your typical homeowners insurance policy. And I'll start off with using a real life example that we just experienced. And I don't know where you were Wednesday at 3:59 a.m., but a lot of people in the western suburbs felt the earthquake. Yep, we had an earthquake in northern Illinois. What? Yeah, I didn't say Northern California, I said Northern Illinois. We experienced a 3.8 magnitude earthquake in the town of Sycamore, Illinois, just outside of Chicago, about 40 miles. And it's one of a kind. We haven't felt it this far north. I was doing some research, but I don't know if it's ever happened. But it happened, and a lot of people talked about it. Saw a lot of comments online of plates shattering and a lot of rocking and rolling going on at 3:59 in the morning. Now, it's an amazing thing to understand earthquakes in this area because we tend not to see it, but it's happened before. That's the amazing part. We had one in 2008 in this area, and we tend to see some centered down south around the Illinois-Missouri border because there's one of the biggest fault lines down there that lies. That's the New Madrid Fault. Now, the New Madrid Fault happened to give off a 8.0 magnitude earthquake. Now, that's a huge earthquake because if you've seen what happened in Haiti, that was only a 7-something. An 8.0 is double what a 7.0 is. That's how magnitudes work. It actually doubles as it goes up. The reported damage of that 8.0 magnitude earthquake in 1811 was so big, they said it actually flattened forests, made the Mississippi River flow backwards and altered its course. It rang church bells in Boston, and they felt it as far north as Quebec. So it does happen in this area. So what it begs to ask the question when we look at proper financial planning and holistic financial planning, and we look at planning for the worst and hoping for the best, is do you have earthquake insurance? I'm betting 99% of the times the answer for most people is going to be no. It's a very unique situation if you do, and I'm not saying you should have earthquake insurance. I'm not here to sell you earthquake insurance today, but I am telling you that if you don't have earthquake insurance and you have equity in your home, you could be at risk. And this was evident by some reports that I have found over the years, and I've kept, and I'll put a link to this, is the National Association of Insurance Commissioners put out a report in 2007, and they did a survey and showed the lack of awareness among consumers when it comes to their homeowners insurance policies. So I didn't want you to be uneducated. I want you to hear this because you need to act on it, and I will help you with it. The report's entitled, What Isn't Covered by Your Homeowners Insurance? A large percentage of U.S. homeowners mistakenly believe that the standard homeowners insurance protects them from a wide array of perils, according to this new study done by the National Association of Insurance Commissioners. But in fact, typical property and liability policies don't cover home damage from floods, earthquakes, waterline breaks, termites, mold, and several other perils, large and small. It goes on to say that they found a lot of people that believed were covered for damages from earthquakes, mold, termites. They even believe that they were covered from damages of break of a water line coming to their home or their sewer line going out, only to find out that they're not in most cases. So it's really important. A lot of times you need to have extra coverage on top of your standard policy. Now, why is this important? Well, in the holistic financial plan, as we always say plan for the worst, hope for the best. And if you plan for the worst and have contingency plans in place, you'll execute a great financial plan. The other one that I like is never let then financial devastation equate to property devastation, or vice versa. Don't let property devastation equate to financial devastation. That we can't have all this money in our home only to find out it's not covered and have there be something that happens. Now, interesting thing in the survey, one of the other things that doesn't tip on is terrorist. Any terrorist reasons for damages, unfortunately nowadays, that does play a role. It's sad to say, but it's a sign of the times that if you had a terrorist attack and your home was damaged, it wouldn't be covered too by most policies. So it's important to understand that what happened Wednesday morning at 4 a.m. potentially could create issues down the road for all of us if we don't act proactively. I'm not going to sit here and be Nostradamus and tell you that this is going to happen again. That's not what I'm saying. What I'm saying is that we've got to plan for the worst and hope for the best. Now, also when it comes to insurance, it's very important to understand some of the things that I have found over the years that are very eye-opening as well. One of them is a video that I will go ahead and attach here also. PBS Now magazine, which is a weekly video magazine that PBS does, did a did a show, and we'll put the video here. I've got the link to the video. Did a show centered around this report that came out in Bloomberg Market magazine back in September of 2007, where they did in-depth research to find people that were affected by the fires of San Diego in 2003 that has still not gotten their money from their insurance companies. They have fought their way to not giving the insurance companies that are named in this report, not giving the consumers the money that they thought they were covered for. Now, I'm not here to bash insurance agencies or insurance companies or any of that. I don't want to take that industry on any day of the week, and that's not what I'm here for. But what I'm here to say is that if you don't have a lot of equity in your home, you don't have to worry if the insurance company at that point in time is there for you or not. Now, I'm not going to condone going out and getting a big mortgage just for the simple fact of not having an insurance company have to worry about them, but it does beg to say that we normally cover 10 great reasons to carry a big mortgage, and maybe this is an 11th reason that you shouldn't have a lot of equity in your home from a natural disaster standpoint as well. And here's the analogy to use that hopefully will give you an aha. That, as I tell clients all the time, I would never ever put $1 into a non-FDIC insured bank. Would you? And they always reply by saying no. Then I have to ask the question, if you would never put any money into a bank that's not FDIC insured, why would you ever put money into a home if it's not fully insured as well? It's a great question, isn't it? It really makes you think that it would be silly to do something like that. Well, that's where we need to look at everyone's situation, and I can help you with that. I can review your situation to see if you're doing the right things and point you into the direction if you're not. From the insurance side, I'm sure you have an agent that you work with, so we can coordinate that with them. If you don't and need a good agent, we can help you with that too. But it's not the point. The point is so that we can review your personal financial situation to make sure you're doing the right things. Now, a story, I always believe that real life stories have an impact, and this is one of them. We found someone that didn't do this, and this person is actually well known. Senator Trent Lott, at the time was a sitting senator, had full coverage, what he believed, on his home in Mississippi when Katrina came through. He had a $700,000 to $800,000 home that was fully covered with hurricane damage insurance, only to find out that he didn't get the $700,000 that was due to him. He only got $50,000 check from his insurance company. He owned this home free and clear, was proud that he paid it off, ironically 3 months before Katrina came through, but was really saddened to find out that he didn't get all the money that was in that home out. I believe he's fought with this insurance agency back and forth trying to get his money, but I beg to then ask the question, if one of the 102 most powerful men and women in our country can't get their money from their insurance agent, what luck do we have if something like that happens to us? So we can't sit around hoping that good things will happen. We do have to plan for the worst and hope for the best. And this insurance side of it is a big one at my heart. Like I said, we've taught you 10 great reasons to carry a big mortgage. This is probably the 11th one. Don't let property devastation equal financial devastation. So give me a holler. I would be happy to see how this applies to your personal situation. Read these insurance commissioner findings. Check out this video. This will educate you. It may scare you a little bit, and that's not what it's meant to do. It just meant to give us realization that we're just not we just can't go to sleep thinking everything's fine. We've got to make sure we got everything proactively set up, and one of them is the equity in our home. So let's discuss this. I'd be happy to review your personal situation and point you in the right direction. Give me a call, 847-970-4239, or email me at econarchy@ccmclending.com. Be more than happy to help educate you on all this, how it plays out to you. Make sure you're doing the right things so you're planning for the worst and hoping for the best, so you indeed will execute a great financial plan. Talk to you next time on Conarchys Corner.